everything is not, markets of earlier when markets used to sell off 200, 300 points, 400 points, and everything would be down 9:1 declines to advances. It's not that kind of a day. Just one quick bit as well. It is, we were talking about the pizzas, and I must tell viewers who might be wondering what's with the pizzas. It's essentially a small treat for the ratings, as we've been advertising on the site, and the ratings perhaps can come up as well. And I just want to sort of say thank you to all our viewers who've kept it with CNBC TV18 through the course of the budget day. There you go. 25 years of leadership, absolutely bang on, and 91% rating during the finance minister presenting the budget. That is unprecedented and at a new all-time high, not like the market, at least not today, but generally. Well, with that quick bit, let me just turn our attention right back to the market. So as I said, large caps are underperforming broader markets. If you want to look at where the next supports, etc., for the Nifty are, the 40 hourly is gone. The 20-day comes into focus, which stands at 24,567. We're a little away from that level, not quite there. Bank Nifty is recovered, and it is now back within the Monday's range. So 4 days now, the Bank Nifty has traded within sort of the highs and lows of Monday. So that is something which is interesting. We broke that range early on, but there has been a sharp recovery higher. SBI tomorrow in terms of earnings. Weakness in pockets like real estate, metals, and IT. Actually, autos as well. Autos is a pack, and we'll talk more about this with Sonia. Pharma stocks are seeing some gains. Again, looking ahead over the next 24 hours, 48 hours, there are some numbers which are due. European markets are down. US equity futures are, if you look at the S&P 500 futures, it's down about 1%. And of course, the big data point, it all started with labor market weakness triggering fears of a recession. But you got the big monthly jobs number, which is due around the time when US markets start trading. And I think that will be closely watched for confirmation. Or if the numbers are strong, then I think it's entirely possible the market gives, this recent thesis that it perhaps is not going to be a soft landing, a relook. So it's going to be back to how it was before. So in that sense, it becomes very important over the next few trading sessions. So that's later tonight. Rima.
Well, things would have been a lot worse if it wasn't for HDFC Bank. HDFC Bank is up 1.5%. And in the last 2 days, you've seen the stock climb up close to about 2.5%. So that's one stock which is actually looking up today. But on the way down, it's autos. The top 3 Nifty losers are the auto OEMs. So it's Eicher Motors, Maruti, and Tata Motors. All 3 of them are down between 4 to 5%. After that, you've got 3 metal names. The top 4th, 5th loser are JSW Steel, Hindalco, and Tata Steel, and these stocks are down closer to about 3%. On the way up, we spoke about HDFC Bank, and some buying, perhaps defensive, is coming through in pharma names. So Divi's Laboratory, Dr. Reddy's, Sun Pharma also seeing some amount of buying. But in the mid-cap space, I think there's one stock, right? One and only Zomato.
Zomato. No, actually, it's not one and only. A lot of new economy, new age consumer technology stocks, actually, they're doing quite well today. So Zomato is definitely one. Info Edge, which obviously has an investment in Zomato, is also moving higher. Info Edge is up about 5% or so. There's Paytm, which is up about 7%. The only linkage to Zomato that I could think of was, remember, Paytm is looking to sell its ticketing business, where Insider is, one of the brands that they have. And Zomato could be looking at buying it. They've been speaking very aggressively about scaling up that line as perhaps a new growth engine with the new app that they're going to be launching. So there you go. That's Zomato and Paytm, 2 stocks up and about. There's Nykaa, which has been doing really well as well. So again, as I said, new economy, consumer / technology companies which are at the cross-section of this, they seem to be doing well. GET&D is still continuing its good form, 5% upper circuit, 3rd day running after the numbers came through. And, one more name that stands out this week has to be PCBL. You heard Mr. Sanjeev Goenka in conversation with Shireen talking about big plans ahead for that company, the group company. The stock is up almost 28% this week. That's PCBL adding to the tally, 7% up today as well. So not all gloomy, Nigel. I take your point. I'm trying to be an optimist too.
Well, that's right. And earlier today, we had mentioned this in our Bazaar opening chat as well, that the bulls could turn to HDFC Bank. Purely going by the close that we saw yesterday, HDFC Bank took support at around the 20-day MA, and that one again is holding up close to 1.5% in an otherwise weak market. So it appears it wants to defend the 20 DMA as of now. HDFC Bank is holding one end up. And besides that, you have a lot of these new age companies actually that are doing quite well today. Two pockets that are doing well. One is the pharma stocks. The pharma index itself is up and about. And the other one is some of these new age themes. There's large volumes that you're seeing on delivery. You have Nykaa that's doing well as well, and Zomato. So quite a few of these names doing well. And just one more point, the breadth of the market. When we had the first tick, the first 5 minutes, there were only 300 stocks that were advancing. Now you have close to 900 stocks. So you pull up the crisscross lines, that will tell you the real story, that the number of stocks that are gaining actually have gone up considerably. They're getting a little closer to each other. Let's go across to Mitesh Thakkar. Hi Mitesh, good afternoon. Well, we are reading it as not such a bad trading session in a global backdrop. Otherwise you'll say, Nigel, what are you talking about? The markets are down 1% and you're saying not so bad. I'm just saying Asian markets are down 3-4%, or there are pockets that are doing well today as well. Your analysis of today's trading session, also the Nifty Bank, that's showing some promise.
I think Nigel, good part of promise is HDFC Bank. You guys have been just highlighting that. And just a disclaimer here that, we made a trading recommendation to our clients on HDFC Bank. So very clearly that's one stock, which is showing good strength. I think it might head towards 1700, 1720 odd levels, and then let's see if it can go further from there. But in the short term, this is one stock which is kind of holding the Bank Nifty and also looking positive. But on the Nifty, I think, my worry is that for the first time, we are seeing some more decline in the indicators, which is suggesting that, the price might not be able to break into fresh highs. First, we had a gap down today, which there was no attempt to fill the gap. And two, I think, the indicators have turned southward. So I think next few days could be slightly on the negative side. My belief is that you might head towards 24,600, and in the worst case scenario, I think 24,300. So these are two targets on the downside. And as long as we don't get past 24,900, 950 zone, I would be slightly negative and want to exit long positions, be light on the long side. So that's the approach which we are taking. On the stock side, I have one buy and one sell. Jubilant Foods, I think, and I'm not sure what's the event over here, but the stock is looking extremely strong on the short to medium term chart. So buy here with a stop at 600. 645 to 650 should be the first target, though I suspect eventually we might see slightly higher levels as well. So that's the first recommendation. And the other one which I have is a sell on ICICI Bank. Again, a disclaimer that, we have some positions, so there's vested interest, but the stock is on the verge of completing a bearish distribution pattern. So it's a sell below 1190. Once that breaks 1190, sell with a stop at about 1212 and look for targets of around 1150 to about 1140.
Thank you very much for that. We'll come back to you for more. For now, let's focus on the auto stocks because they are under severe pressure today. Sonia joins in with the reason. Sonia.
Well, thanks a lot for that. So there are different reasons why different auto stocks are under pressure. Let me take you through that. Tata Motors, the stock is down almost about 4% because the management commentary was cautious at the call yesterday. They did mention that JLR is seeing demand headwinds in China and Europe, and cost or rather customer acquisition cost has gone up. They expect some production constraints in Q2 and Q3 because of floods at a particular aluminum supplier. And the consolidated net auto debt has also gone up for the company to 18,600 crores versus 16,000 crores quarter on quarter. Let's move to Eicher Motors. Now for Eicher Motors, Royal Enfield sales were on the weaker side. Royal Enfield total sales were down 8% year on year at 67,265. Maruti, the July sales were below street estimates. In fact, the entire domestic passenger vehicle sector has been under pressure for a while. Total sales down 3.3% year on year at 1.75 lakh units versus Nomura's estimates of 1.79 lakh. And there has been weakness in the domestic market as well. And finally, we move to Escorts Kubota, where the revenue decline this quarter was largely led by a decline in the tractor segment for them. So most brokerages are a bit cautious. JP Morgan is underweight. They have a target price of 23.90, while CLSA has an underperform with a target price of 24.40. Back to you.
Okay, all right, Sonia, got that. So not a great month in terms of just expectations and what has actually been delivered by most companies. Thank you for that roundup. With that, let's go to our first guest on the show. We have Prakash Diwan joining in, and Prakash, of course, follows the auto space very, very closely. Prakash, what do you make of things? And I think this is what's leading to a lot of profit taking as well. The sense or the anticipation that maybe sales will start slowing down from here on. Would you just treat this as an aberration? Because even the last month was fairly sluggish. Or do you think things can really turn around by the time we get into festive season?
So, good afternoon, Surbi. So, I think primarily these numbers on the monthly sales data look a bit stark and unfavorably so, given the fact that we just had numbers, the quarterly earnings numbers come through for most of these players. M&M had a very decent set. Maruti had a very good set. So, when you juxtapose this sales data with the numbers, then you realize that the quarter ending June was okay, but then July is not turning out to be in the same breath. So there will be some time, as I said, even on the earnings call, there will be consolidation in the farm equipment side, and that's exactly what M&M numbers and Escorts numbers tell you. Things haven't really changed, and usually you would expect that to happen post the monsoon, and that kind of coincides with the festive season that you mentioned. So I would believe there's some time. The other thing that Tata Motors or M&M on the PV side are reporting very clearly tell you that the market is still not completely convinced to go the EV way. So hybrids will still have a place under the sun and probably will grow much faster because it's a little bit of a smaller segment that is still fancied. People are trying it out and getting decent results in terms of performance and also. I would believe there's this whole flux of sorts in terms of consumer behavior, which is actually stopping from most companies to report very significantly better numbers. And this could go on almost till the calendar end, FY24, calendar 24. So, it's not just festive season, but post the festive season, you'll get some clarity. So till then, autos could probably be sideways. I don't see any positive triggers beyond, let's say, the festive season demand that could pick up, but I have doubts on that as well. Otherwise, you'll probably have to look at ancillaries, you'll look at some global plays, so that's the flavor. You've got Honda supplying to Japan. Elevate has been exported from here. It's received very well there. So, those are the things that you will have to look at, and who are the ancillaries who are benefiting from this entire change that's happening in terms of our companies going global rather than domestic. So I would look at the ancillary piece, not so much of the OEMs at this point in time.
Pull up a 2-week chart of Philips Carbon Black or PCBL, and that's a stock which has been flying ever since that interview took place with Shireen. Big moves, Prakash. At current levels, is there value, or do you think the stock has run too ahead, on expectations?
So, no, interesting name. See, I've been tracking it quite closely because it has a connection with the tire sector. Now, what's happened is a couple of things that have changed for this company, Rima. From a tire-grade commodity chemical manufacturer, they actually tried morphing into a specialty chemical side. They had a very large acquisition, spent almost close to 4,000 crores, 3,800 crores to be precise, on the Aqua Farm acquisition. They actually raised a lot of debt for that. So the balance sheet is also leveraged quite well. All of this is to stop their reliance or this high dependence on the tire grade carbon black side. There they have done very well also. They've actually seen utilizations a bit before schedule of the expanded capacity. But my sense is that for them to be able to make some breakthroughs, now we'll have to wait for the numbers to tell you that, whether it's the water treatment chemicals, whether it's some sort of battery chemicals that they are trying to look at getting into. So there's lots that's happening. But yes, the stock has actually played catch up. It deserved to be re-rated. It didn't happen because people are worried about execution. Q1 is probably okay. We'll also have to look at Q2 for the transition to be smooth enough, because the scale-up of Aqua Farm is going to be the key here. So I would believe, yes, it has a lot of promise, but you'll have to give it some time because the run-up has already discounted what's done well till now. But what's going to do well or what's likely to do well will, of course, have to be seen. But yes, very, very promising. Now it's no more a tire-grade carbon black manufacturer. It's much more than that, and you'll have to rate it accordingly.
Okay, PCBL having an excellent run this week for sure. Prakash, stay on. Another stock that's having an excellent run is what else but Zomato. So by now we all know, numbers, remember, came out same time, roughly the same time yesterday. And by now we all know it's been a great quarter. But we've got Mangalam joining in to map the journey. It's more about just this quarter's outperformance. It's just the rise and rise of Zomato, and it's come a long, long way after, of course, the naysayers kind of were writing it off after IPO. Let's go across to Mangalam and understand everything that's working for the company.
Well, it was earlier the rise, thereafter the fall, and then the resurgence of Zomato. And it's hit a record high in today's trading session, a 100% move in this year itself. And it's a long way from, at one point when the stock was 40 rupees in July 2022. And 2 years hence, the stock has actually moved 40 rupees just today, hit a record high of closer to 280 rupees as well. What are the things that went right for the stock to rally 7 times in those 2 years? 4 things. 1, improvement in their food delivery operational metrics. So operating leverage played out there. Secondly, the dramatic rise and improvement in Blinkit. You know, quick commerce as a category was something that the country took with both hands. And that too with operational improvement is something that the street liked as well. The third important thing was improvement in market share. We're talking about this market being a duopoly. Zomato has consistently gained market share versus Swiggy. And the fourth important part is that not only have they done well here, they've also continued to see new verticals of growth. So let's take each of them as it comes. On the food business itself, you know, from Q1 FY24 to Q1 FY25, the EBITDA has jumped from 181 crores to over 313 crores, and this even as the GOV has compounded at over 30%. Similar is the case for Blinkit. I mean, same time last year, Blinkit would run into a loss of 133 crores on the EBITDA front. On a quarterly basis, it's grown over 100% year on year, GOV-wise. And now, despite the investments that they've made, over 600 stores in the country, and it's still EBITDA negative at around just 3 crores, they've upped the guidance out there as well. With that, the cash on their books over the last 1 year has increased by about 1,000 crores too. Blinkit, which has been the cynosure of everyone's eyes, is now valued at 20 times versus what Zomato paid for it in 2022 itself. So that's been one of the bigger value drivers for the company. And out there, the company has actually gone ahead and increased their growth targets as well. Deepinder Goyal had earlier said that Blinkit would drive more value for shareholders in next 10 years than Zomato itself. And they've gone ahead and upped the guidance from 1,000 stores by 2025 to 2,000 stores by 2026 with profitability. Now the most exciting part is the 2 businesses are done. What happens to the third one? Going out, where the company sees use cases in, movies, sports ticketing, live events, staycations, etc., and for which they are launching the third app, which is District by Zomato. Earlier in the past, they've gone on record to say that they are in talks with Paytm to buy their ticketing business as well. And if things go well, they say that going out will be the third largest B2C business emerging out of Zomato. So that is something that the street will start ascribing value to too. So with good growth coming in, EPS estimates have increased. So we've seen a lot of brokerages go ahead and increase their estimates by 30% for some cases as well, 36% as per CLSA. But no one, says it better than Motilal Oswal, where they say that Blinkit defies our attempts to value the stock fairly. And as a result of which they have a target price of 300 rupees too.
Mangalam, what can be, so the bull case, as Motilal put it, right, is out there. But at the margin, as competition, is anyone talking about competition? Zepto, for example, I think they've raised money. There are talks going on between Amazon and Swiggy Instamart, because, I think their own attempt at doing something did not really work out. Anyone talking, could these be risks, or in what shape or form is this being talked about, if at all?
Well, in the shareholders' letter itself, Deepinder Goyal and Albinder Dinsa had said that the word competition has been it has coincided with the word quick commerce itself. As soon as the word quick commerce emerged, there was a fair amount of competition. And I take your point on the valuations and the money, everyone else is raising. But look at the footprint. Zomato has 639 stores. No one else has that much. And they're also looking at targeting close to around 2,000 stores by 2026. What really works for them, apart from scaling their Blinkit business, is the data transfusion that they get. So because of the orders and the data history that they have on Zomato's food business already over the last many years, they can, classify their consumers into cohorts of where their right to win and their success is the highest. Average order value on, Blinkit has increased from 6 lakh to 10 lakh in just 1 year. And their top 50 stores have an average daily order value of close to 18 lakh as well. So they believe with them expanding further, it'll only do better. They're not ceding market share or giving away market share to newer quick com players. Instead, they're taking away market share from the next day delivery e-com players, increased consumption occasions, and also at the same time looking at, taking market share away from some of these modern trade players as well. Not DMart in particular, but the other modern trade players.
Okay, Mangalam, thank you so much for that. And Prashant, I think one more thing that Zomato, the management has showcased so successfully is that they can create a new category. They can, piggyback on technology and run a business successfully. That was the biggest question on Zomato, right? In between when the stock had fallen to 50 levels thereabout. And now with this third category, this going out category, the District app, I guess perhaps market share is a factor of mind share. And when you're going out, Zomato is right up there in terms of mind share. Mangalam, you want to comment on that?
Yeah, I mean, you know, what say something like a Book My Show does, it's become your all-in-one ticketing app, right?
It's a whole ecosystem that holds you.
If the entire ecosystem for Zomato comes in, who's to say that, you know, from going not only your food, eating out, your concerts, your staycations,
booking restaurants, tickets.
And even quick commerce by itself. Earlier it was only for essentials. Now people are buying PS5s, iPhone 16s, the next, even India jerseys and all of that on quick
one of these quick commerce. Yeah.
Ecosystem makes it a lot more amenable to the users, and then having the data of people's purchase history, that also trying to profile customers, giving them the right products, that sort of synergy gives a lot of value as against someone else who can build this moat.
As the song goes, right? You can check out any time you like, but you can never leave. And that's the ecosystem that I think someone like Zomato is looking to.
You know, what is impressive for me is if you compare Swiggy and Zomato, I think Swiggy has one app, right? Insta is within.
Yeah.
Zomato has, you need to have the Zomato app, you have to have the Blinkit app.
And now the third one, that's a...
No, but even with two apps, I mean, it was always the case that how many apps will one have on this, app for this, app for this, app for that. But with two apps, and Swiggy is more, I mean, you could say, is more...
It's all in one.
All in one.
Yeah.
But I mean, I think you'd agree. They've done much better with two apps, and I think that is impressive. I don't know how they've done it, but...
I get a cricketing analogy for that. You have one all-rounder in your team, or you have Rohit Sharma in your team along with Jasprit Bumrah. So Blinkit, the execution that Blinkit has is no different from what Jasprit Bumrah does. And on the Zomato side, it is Rohit Sharma's batting. As against having one,
Virat Kohli, which is Swiggy.
Not Virat Kohli.
He wants an all-rounder.
You have to have someone, who's all-rounder, who bats and bowls.
Right, well, Mangalam, thank you very much. Interesting chat here, and we'll, it's a topic where we can sort of go on and on. So many perspectives, but it's such an interesting business and interesting space, really. UPL numbers are at the bottom of the screen, by the way. That's, again, a very well-watched name. The revenues are absolutely flat, slightly, was it higher? EBITDA is down 13.5%. Stock's taking a bit of a dive. 1,100 odd crores on the EBITDA as far as UPL is concerned. Margins have come in at 12.1% as compared to 14.2%, which is, I'm assuming, a disappointment. We'll put these up against what the expected numbers were, but this is the comparison with actuals. Adjusted EBITDA margins, I mean, looking pretty poor. So, again, one of those stocks where people have been waiting for a bit of a turn, signs of a turn, but so far, I don't think there's very much. There's usually a statement from the management which follows, and I mean, it characterizes the business environment, and I'm sure that'll come up for you as well. Prakash, you want to come in, sort of weigh in on Zomato and what you'd like to do with the stock? We already own it, I guess. There's not too much to think. Keep owning it. But what if you don't? What do you do? Yeah.
So, Prashant, if you own it, you of course keep owning it. I don't see any reason for anybody to throw in the towel. Valuation has always come up as a topic of heated discussion on this every time it moves dramatically. But, these are businesses that, we get away by saying it's going to be extremely difficult to value. The opportunity size is so huge. So this is like, it fits into that gorilla strategy. In a land of monkeys, you'll probably have one gorilla which grows much more higher and faster. And that, when that happens, you'll probably have a very different take on valuation. So you'll have to wait for that. The wait till then could probably see a lot of whipsaws. There could be news flow which can bring things down. But you buy the stock, on days where market gives you that soft entry point. I mean, it's not something which you will not get at low valuation. It's not racing away. It's 250,000 crores is a huge base in terms of the 6 shareholders, in terms of views. So you'll have people wanting to exit at some point in time also. So I'm sure you'll get those chunks. But by and large, the story seems to have got established, and that's rubbing off on a lot of the new age businesses which struggled in their earlier avatars, and now they're kind of morphing themselves into more scalable businesses. Case in point is Nykaa. Look at the way they've done this Lux outlets. It's very different, the kind of premiumization that they are basically now able to implement because of that outlets. It's fairly faster and superior to what we thought. So you will see Zomato become a case study for a lot of the other businesses as well, and that's going to be more interesting. But yeah, you could buy it on dips for sure, not necessarily today.
Thank you, Prakash, for this conversation. By the way, UPL continues to slide lower. Now it's 3.5% down. The street was anticipating that the losses would narrow on a quarter-on-quarter basis, but that's not happened. They've actually widened, and I believe the debt on the books too has gone up, so putting some more pressure over there. We'll get into a break. On the other side, we'll invite Mithun Aswath from Kiva Advisors. Stay tuned.
Okay, welcome back. Actually, the Nifty's taken a bit more of a cut, so almost 300 points lower now on the index, 24,728. And it is one of those rare days where, the dip is remaining a dip. It is not coming back with vigor like it usually has, day after day, week after week, month after month. But again, as we were discussing in the morning, it's not a completely down and out market at all. A lot of action on the upside as well. Stocks, Zomato, of course, is just one, but there is so much else which is doing well. So it's discerning in that sense. Mithun Aswath is with us, managing partner at Kiva Advisors. Mithun, good to have you with us here. Thanks for your time. We were just talking about Zomato. Why don't we, since it's by far the largest volume traded gainer on the NSE today, I'm assuming so, lots of interest there. At this market cap, will you make a lot of money buying it? It seems compelling enough, but how would you think about this one?
Yeah, afternoon, Prashant. I think, we've played, this whole internet, space through Naukri or InfoEdge, which gives you a holistic exposure across Zomato as well as Policy Bazaar, as well as their own business, Naukri, 99 Acres, and Jeevan Sati. And also they have several investments in startups which they've made. So that's the way we've been playing it. Obviously, Zomato is helping InfoEdge as well, because close to, I think, about 50% of the market cap of InfoEdge is now the investments it has in Zomato and Policy Bazaar. So we continue to be quite positive on InfoEdge because we do see some rebound in the hiring as well happening. And if that happens, their core business will start growing, and that will bode well for the company.
Hi Mithun, good afternoon and good to see you in. Well, the other stock that's on your radar is BHEL. 15 months ago, it was available at around 80 rupees. Now it's at more than 300 rupees, but you believe it's still offering good value? What do you like about it? The big order book that they're sitting on, and you believe execution is going to, come on stream from here on?
Yeah, afternoon, Nigel. Obviously, BHEL is a little bit of an enigma. The revenues have still not kicked in, but the order book, which was not there maybe a year ago, has ballooned. It's over about 1.3 lakh crores, and their last year revenue was about 23,000 crores. If you look at BHEL, what are they addressing? They're addressing the power sector, where the government's focus is, especially on the thermal side. They're likely to get about 10 gigawatts of orders every year for the next 4 to 5 years. As well as on the transmission side, the government there's a very large spend, and annually there as well, BHEL is likely to get large orders. So if we are going to have a company which is going to get 70,000-80,000 crores of orders annually for the next 4 to 5 years, execution and revenues is just a consequence of that. At the current revenues of 23,000 crores, they are less than half their peak revenues, which they used to do in FY 11, 12, 13, which was in the order of 50,000 crores. So I think, it really presents that Make in India opportunity. Obviously, the stock has done well, but we think the upside from here is mainly going to come when the numbers start flowing through. Even the current quarter, the numbers don't look too great. But I think when we get to the second half, we will start seeing maybe the fresh orders, which were more remunerative, start getting booked. And then I think the street will start paying heed to it.
I was just going to ask you that, Mithun, hi. Yeah, it was a pretty disappointing quarter, right? Because the losses continued at the EBITDA level, at the PAT level for BHEL. So you're saying maybe second half is when we'll start seeing the improvement come through. Anything else in this space, capex, heavy industrials? Because not just BHEL, a lot of other stocks have also run up very, very hard. So one has to tread with caution. Do you like anything else here?
No, this was one which we just thought, we can't avoid it because it is so large in scale, and it would address literally the thermal, the transmission, nuclear energy, all of it. And even they're making inroads into, the railway side with they're only developing their own Kavach as well. So I think they're addressing very large pockets where the government has a massive thrust over the next few years. So it's inevitable that they are going to get large orders, and it's just a matter of execution. And I think we just sit tight and let things kind of unravel itself.
Mithun, would you recommend subscribing to Ola Electric IPO, or would you give it a pass?
Honestly, Rima, I think it'll take some time for us to digest, understand how the numbers are going to unfold. It's still not very profitable. And we've played this through Tata Motors. And that Tata Motors is also going through a demerger where, the commercial vehicle business and passenger vehicle businesses will be in two separate listed companies. So I think there we see a little bit more of scale. They have also, it's not a proof of concept. You've seen actually delivery, they have the largest market share. So, and also they are going to turn debt free by the end of this fiscal at a complete group level. So I think if we were to play, the electric vehicle theme, we would continue to be focused there. However, let the listing happen, let a few quarters pass by, and then I think we will relook at this.
You also owned Eicher Motors in the past. Eicher Motors sales numbers for the last few quarters have been a bit stagnant on the RE side, Royal Enfield. Would you the stock is down well, especially in the last 3 months. You've seen the stock rally from levels of about, 4,000 to 4,700. But the medium-term view on Eicher Motors?
I think we continue to remain fairly positive. You will have these months where there is underperformance in sales. But if you start monitoring a little closely, the above 350cc sales have continued to grow every month over the last few months, despite the other category coming down. So I think they continue to premiumize, and Eicher continues to do reasonably well there. They will also come with a slew of launches. I think they're also looking at an EV bike in the next year. So we tend to be quite positive there because the addressable market is only going to grow. And compared to the other two-wheeler manufacturers, their sales is still quite small.
Okay, so, finally on the market overall, are you still constructive? Are you still confident of deploying money? And I know we've been at elevated levels, right? 25,000 was hit this week. But there's a lot of chatter, for instance, regulatory chatter on F&O. Then we are seeing this volatility in global markets, question mark on global growth, etc. So overall, are you waiting on the sidelines for a bigger dip to buy? Or do you think one just has to keep moving ahead with this market without over-analyzing?
I think obviously there are concerns on potentially how the US will do. Will there be a soft landing? There's already talk about interest rate cuts there. You've seen the ECB cut, the Bank of England cut yesterday. You could see the Fed cut in September. But we don't want to get into a cutting cycle where the economy is slowing down rapidly. So I think that will be the biggest risk for markets where, interest rates are being cut while markets continue to fall. So that is something that we need to monitor closely. Having said that, I think in India, opportunities are present in some spaces which have kind of underperformed over the last few quarters. I think, a little bit of, you saw some bright spots in the IT services businesses. We are also seeing some green shoots in the consumption side, especially on the rural consumption side. So I think there are pockets. I think it's going to be rotation. Obviously, at the 25,000 Nifty levels, at the headline index level, is it looking cheap? I don't think so. So it could be rotation out of some sectors where, growth is not coming, while, the expected growth in other sectors which have underperformed will start driving the market.
Okay. All right, Mithun, thanks a lot for joining in and filling us in with your quick take. Wishing you a good Friday evening and a rocking weekend ahead as well. Well, a quick check on the markets. Actually, we've slipped a little bit. Now we're at the low point of the day. The Nifty Bank as well has done a U-turn of sorts. And SBI, getting into the weekend, getting into its numbers, it's looking a little bit nervous. I'm not sure why, but that stock is still down. It's moved to the low point of the day. Well, a good time to tell you about a couple of stocks then that are moving around big. We have Cummins India. Well, they decline on the back of negative commentary coming in from the parent. Vamakshi joins us to help us out with a quick analysis. Vamakshi?
Well, absolutely. Cummins in focus today. The stock has taken a very sharp knock in the trading session today after commentary that came through from the global parent. In the conference call, they highlighted that in the quarter ended June, revenues in India, which includes JVs and some other entities, were at $649 million, which is a decline of almost 10% on a YOY basis. Power generation's revenue also decreased by almost 17%, and this is mainly as the base quarter benefited from pre-buy demand ahead of emissions regulation changes. Overall, in 2024, they expect the India business, which includes the other entities and the JV, like I mentioned before, to rise to almost 8%. Now, keep in mind that overall, while this commentary does seem negative, but Cummins has 7 entities in India, including 3 JVs, out of which only Cummins India is the one that is listed. So the numbers that the company broadly spoke about are actually for all of the entities combined and not just Cummins standalone. The decline in power gen revenue, however, is a bit of a concern for Cummins India, given that a significant portion of the revenues come in from this particular product. But we also have a note that came in from Macquarie. They estimate that Cummins India accounts for nearly 1/3 of the group's India revenue. They believe that it is difficult to draw a direct correlation to Cummins India's power gen sales given presence of other group entities in India, and they acknowledge that it does present a downside skew to the second quarter power gen segmental growth estimate of nearly 12% for Cummins India. So largely this seems like a knee-jerk reaction for Cummins.
Okay, thank you very much for that. All right. The other stock that we were going to look at is Newland Laboratory, which is now an 11,000 rupee stock. Till yesterday, it was sub 10,000, but with the 18% up move, this stock is zooming ahead. But moving on to some important sound bites coming out of SEBI. Speaking at the 21st Annual Capital Markets Conference, SEBI member Anand Narayan says trading in options on or closer to expiry day is like a casino machine. Adds that SEBI will take fresh steps both on development and on the regulation side of F&O if required. Listen in.
Progressively through the course of the expiry day, a speculator can buy option structures with a very small capital outlay, which can possibly provide a large profit if the index were to move only by a few points. This optically cheap option premium, which might be as low as a few hundred rupees as we approach expiry time, appears to entice a whole bunch of individuals to trade in and out on expiry day through the day. Trading in index options specifically close to expiry then starts to resemble a slot machine in a casino, with individuals putting coins into the machine, hoping to hit the jackpot. Even after the current consultation and the final steps that are eventually taken in this regard, we will continue to monitor activity in F&O markets and in a consultative fashion consider fresh steps, both developmental as well as regulatory, as necessary. In addition, both the expert working group for F&O and our secondary market advisory committee will debate other structural issues relating to derivative markets, including ensuring that we are measuring and monitoring risks accurately and ensuring that there is some balance and connect between the underlying cash and derivative markets.
Okay, it doesn't get clearer than that, does it? And Mr. Anant Narayan, I think, was part of the committee that's created that consultation paper, which is right now out in public domain, which is looking at several measures to tighten regulations around the F&O market, including bigger lot sizes, among other things, and regulating the way the strike prices are put forth as well. And that's SEBI. In fact, the SEBI chief also today made a very similar comment, saying that there is heightened need to monitor the F&O market and curb excessive speculation. Well, with that, let's take a quick break, come back on the other side, and we'll get you a check on what dealing rooms have been saying today.
Well, the markets continue to remain under pressure. We're down closer around 300 points. But as we said, if you compare us with the rest of the globe, well, we're doing a relatively better, still down less than 1%. But Nimesh joins us to help us out with the dealing room action. Nimesh, what's the buzz? Is there big selling or are dips getting bought into?
Looks like dips are getting bought into. If you look at today's market compared to what the Asian markets are, or for that matter, global markets, we've relatively outperformed,
Absolutely.
right? And then while the Nifty is down 1%, there are good amount of buys as well. A lot of mid caps. In fact, there has not been a big sell-off in the broader market stocks today. So that also says that there is domestic liquidity which is supporting the broader market stocks today. The bank Nifty is relatively outperformed, largely on back of HDFC Bank. Looks like some bit of pre-positioning is happening now in HDFC Bank as well. We have the big MSCI event on 13th of this month. If there is a one-time inclusion, you'll see a big inflow into HDFC Bank. So that's a hope as far as HDFC Bank is concerned. On the other side, within the large cap names, IT has seen some selling pressure today, and so has some other private bank stocks. So that's one pocket which has seen some bit of supply from the large institutions. But broadly, I guess not a bad outcome given that what the kind of sell-off we've seen in the global markets today.
All right, and what about individual stocks? The buzz goes on, plenty of large trades, plenty of news flow out there. So fill us in with the top stocks.
Absolutely. So first I'll talk about a couple of stocks where there is expected to be large block deals. So the first name is Kotak Mahindra Bank. Well, the stock has been largely consolidating of late. I understand there could be a large block deal very soon. A leading sovereign fund is what I understand is going to be the likely seller. In fact, that particular fund has a lot of exposure into India, and they largely seems to be selling out the India portfolio. So that's the reason why there could be a large block in Kotak Mahindra Bank. The second stock is Zomato. Big move in that stock on the back of very strong Q1 numbers. There were multiple upgrades as well. But now I understand there could be a clean out trade from a strategic investor in Zomato. They've been seller for the last 4 quarters. Now it looks like there could be a clean out trade in Zomato. The third name is Genus Power. A big intraday swing in that particular stock. There was a large block, almost 1 crore shares got traded in the morning trade, and after that a sharp recovery as well. Now stock locked at 5% upper circuit. I understand there was the promoter entity was a seller in today's block, and a single buyer and a leading FI investor who bought into today's block deal. So that's Genus Power. And the last is KPI Green. In a weak market, that stock is also holding up, trading in the green today, good volumes as well. I understand the company is likely to raise funds by QIP, which might get open next week. So that's the trigger on KPI Green.
Nimesh, and the season of blocks is back. You're giving us two, but there's a longer list, right? Which Nimesh is going to put out later on Editors Roundtable.
Oh, absolutely, Prashant. So, we've already seen blocks worth 5,000 crores got changed hands in the last 1 week itself. And looking at the list which I've picked up from investment bankers and sources, it's a long list. So it looks like August is going to be quite hectic as far as blocks are concerned.
All right, given, markets, blocks have been coming when markets have been buoyant, right? So let's see. Are we, after a very long time, getting into a bit of a risk-off zone? One doesn't know. We've had these one-day shakeouts and markets have moved right back. But we've never had, in the last 2.5 years, markets which have stayed down for very long at all, even for a few weeks for that matter. Thanks very much, Nimesh. So it will be interesting to see, both the market and, of course, all this deal activity, blocks which are lined up. So the pipeline is there, and given markets stay strong, I think a lot of this will get done. 300 points lower for now, 24,720. I think one of the reasons, of course, is also the fact that markets are watching what's happening on US futures. So I think actually Nasdaq futures are down about 1.5%. S&P 500 futures are also down over 1%. So US equity futures, I think, is the real reason why you've got, even as we go into close, there is a bit of a drag. There is, of course, also the jobs data, which I think is the big macro point which markets will ponder over. But trading ideas, short-term sort of trades, Mitesh is back with us. Mitesh, what do you have?
Yeah. So, Prashant, I have a sell on Naveen Flooring, or STBT rather. Keep a stop at about levels of 36.30 here and a target of 35.54 tomorrow. Most likely is what I think the stock can do. And a BTSC on Page Industries with a stop at 42,550 and a target of 42,900.
Okay, got it, Mitesh. By the way, the market is reeling under pressure. We are back to practically the lowest levels of the day. So it's not, ending up with any sort of a meaningful recovery. There you go. So not much happening. Bank Nifty is again down about 200 points. That kind of a Friday. Speaking of the Bank Nifty, we'll have another important cue to react to on Monday. State Bank of India is going to be reporting numbers over the weekend. Tomorrow is when the numbers come out. Abhishek is here with the key expectations. Abhishek.
Well, analysts are factoring in, a profit decline or the lowest profitability on a sequential basis as well. The key reason being the missing on, treasury income that is expected to decline as much as 70% YOY and about 66% quarter-on-quarter as per Kotak Securities estimates. So watch out for the deposit growth, which is expected to be lower than the system. Motilal Oswal estimates, deposit growth of 10.6% YOY and about 1.8% sequentially. Again, Motilal Oswal estimates loan growth to be better than system average at about 17% YOY and about 2.5% sequentially. Net interest margin can come under pressure YOY but improve sequentially. So Morgan Stanley estimates a net interest margin decline of 12 basis point YOY and an improvement of 1 basis point sequentially. OPEX to remain high, which can impact the operating profits as well. Slippages are expected to rise quarter-on-quarter. This is generally seasonal in nature, wherein the agri slippages come in this quarter. So Morgan Stanley estimates a slippage of 8,500 crore, which compares to about close to 4,000 crore that they had in the previous quarter. Recovery and upgrades will be lower as per Kotak Securities. Analysts expect asset quality to remain stable or improve sequentially. So Motilal Oswal expects gross NPA ratio to remain flat at about 2.2%, which was the same in the previous quarter. And they expect net NPA ratio to improve by 10 basis points on a sequential basis, 2.5%. Management commentary with respect to growth, unsecured loans, net interest margin outlook will be important to watch out for. Our polls suggest NI growth of 8.5% YOY and about 1.2% sequentially. We are working with a profit growth of just 1.5% YOY and a decline of 17.2% sequentially, largely led by the decline in the treasury income that they will have in Q1 FY25. Back to you.
Thank you very much for that. Counting down to the close, and it's been a rough week for IT names too. There were no big large cap IT names that reported numbers. There were a few mid cap names like Birlasoft, which disappointed, but LTIMindtree has lost 5% this week. Wipro has lost 4.5% this week. Even Infosys is down close to about 3% this week. So it's been a tough one for these IT majors. Get into a break. We'll come back and invite Hemang Jani on the show. Welcome back. Down more than 1% as we're winding down Friday's trading session. And for the week, Hemang Jani is now with us. Hemang, afternoon. Zomato is the big mover of the day, 13% up. What's the best way to play it, Zomato or InfoEdge, which has a 13% holding?
So clearly, Zomato has been outlier, and after the performance and the kind of growth people are talking about, there is going to be a positive bias. The only thing is that now that the stock has run up so much, it would be good to kind of enter if there is a small correction on a bad day. InfoEdge, I think both the triggers are playing out well. The hiring data points which were out, where the hiring has started in IT domain, along with the fact that Zomato has done well and InfoEdge has 30% stake, so it's playing out that way. We will be more comfortable with Zomato, given the traction which is there on the Blinkit front and also the food delivery side. We think that even from 6 months to 12-month perspective, this can give you another 15-20% kind of an upside.
Okay, that's a word on Zomato. Just quickly on the auto selling, Hemang, what's your sense? I mean, big cuts today. And for good reason, perhaps, because obviously numbers have not been coming through for several months now for some of these companies. But Tata Motors, the likes, I mean, Maruti, the whole pack is down. Would you use the dip to buy, or would you look at newer things like Ola Electric in the auto segment? What thoughts here?
But I think the outlook is not that good. On the monthly numbers, again, there was a bit of a disappointment when it comes to Maruti, Eicher, and maybe few other players. So yeah, the approach auto is that the space is doing well. Maybe Bajaj, Hero, if you have a small, there should certainly be a buying opportunity. And Maruti, so I think at some point we do see the festive season related data points. They tend to come out. So that will provide a good trigger for the stock. So Maruti, 5% is a deep cut. Another maybe 4-5% cut would be a good entry point.
Hemang, out of time, just about a minute left for us to close trade, and the global turmoil weakness is going to push the markets down by 300 points today. The Nifty ending around 24,700, while on the Sensex, it's more than a 900-point fall, 1.2% gone on the benchmark indices for the day. For the week, the Nifty and the Sensex are down close to about 0.5%. Mid-caps participated in the fall today. The mid-cap index down over 1% with a negative advance decline ratio. They managed to eke out some gains for the entire week. The big losers today were the auto names. So Eicher Motors, Maruti, Tata Motors under pressure. Metals too, giving it company with a 4% fall on JSW Steel, Hindalco. IT saw some cuts with Wipro, LTI, Mindtree under pressure. On the way up, buying in HDFC Bank, that's supported with a 1% gain. Devi's Lab ahead of its numbers later. Devi's Lab also ending up in the green.
Yeah, but at the end of it, this is a crunching blow, taking the Nifty below 24,700. And the decline on the large caps really accelerated in the last 15-20 minutes. Mid caps are also down, 1% lower on the mid cap index. A lot of selling on PSUs like BEL, SAIL, NMDC, BHEL, ONGC, Bank of Baroda. So PSUs across the board seeing lots and lots of profit taking. Aside of that, you have some movers and shakers on the back of results. Repco Home Finance, on the back of results, 7% lower. Somani, GR Infra, these were the result disappointments. Escorts, because of the numbers, sales numbers not really coming through. But anyway, let's end on a happier note. Zomato is the stock of the day, about 13% higher. Paytm 6% on the upside. Those were some of the big winners, as were some of the other names like Newland and, of course, PCBL, which is the star of the week, 28% up on that. Sanjeev Goenka Group company. Well, with that, it's curtains on this edition of Closing Bell. The Nifty ending just below the 24,700 mark. As we wind down, let's end with some good news. The numbers are out, and it's final. India watched Budget 2024 with CNBC-TV18. CNBC-TV18's dominance continued as it knocked out the competition on Budget Day. CNBC-TV18 is a clear number one with 91.2% viewership during the Budget Day.